Hey there, welcome back to another episode of Simply Investing. I'm sorry it's been a while, but been kind of crazy, kind of busy. Let's start off with February up 11.5% when all said and done. Now that's something I like. And that was mainly because of the market rebound towards the end. I mean, the stocks I picked just floored it. And it's like the constant buying in the beginning of the month paid off at the end. So now that this has been a year and we're in the March when I started the Robinhood experiment, it's at around $2,000. $2,000 in 1 year with an input of about 520. That's quite a lot. That's a pretty big increase, and a good amount of it was dividends. If I think in like June, somewhere around there, I had a lot of King stock, which was a digital game maker. Paid a dividend of $14.85 a share, so a lot of that came from that one-time dividend. But a lot of quarterly dividends were dispersed in there. A lot of ups and downs, a lot of some day trading, a little bit. But I think I proved that you can make something out of nothing. It may take a while. I don't think you'll make multi-millions, but you can definitely turn, if you got nothing, you can get to a couple thousand within a year, and you could probably get within 10 after a couple years. If you trade diligently, you move smart, you're not trying to predict trends, rather than you're just trying to buy stocks that have great value that are severely undervalued. Now, my next experiment is, if I do $20 a week in Robinhood and $20 a week in Betterment, who's going to come out better? That's my next experiment for this year, until next March. If I invest in Betterment.com, $20 a week, and I invest in Robinhood and do it myself for $20 a week, who's going to come out on top for the year? That's going to be a good experiment to do. And a good way to test out the Betterment app. Now, I've already signed up for the Betterment app and set everything up for both accounts. Made a new Robinhood app account, so that way I have $20 just automatically going in every week, just like $20 automatically gets deposited into Betterment. So both are on an equal setting, $0 in both accounts. What I can say is, Betterment tends to send a lot of information. They do. I haven't even done anything yet with an app, and they're already sending emails like, what's my goal, what's my plan, what's my strategy, what am I comfortable with, what's my risk, what's my risk comfortability level at, a lot of things like that. And that I think is very good for people who are new to investing, because those are the questions that you need to ask. And a lot of times, even if you just got $25,000 and you handed it over to Merrill Lynch or JP Morgan or Charles Schwab or any of the investment houses, they don't really ask you anything. They just they just take your money, tell you how they're going to invest it, and you're like, okay, and you walk away. Which actually, come to think of it, if someone gave the critique and level of focus that those investment houses do for very wealthy people, and you did it to the common folk, and you gave that same in-depth analysis for them, you'd win the people over, and you'd be a very, very, very endowed financial firm making lots of money and trumping all of the all the other investment houses. But anyway, let's talk the market. What's the big plays right now? Like I said, I think you should have been doing is buying finance stocks throughout the year. They've been getting hammered, now they're up, and I like it. Next, I would focus on technology again, especially Apple, depending on how this court case goes. But Apple's still, I think, a great buy, considering everything. I still think it's a great buy. And I would also check into Apple suppliers, because again, they say, well, they're not going to sell as many iPhones as they did before. I think they're going to sell more iPhones, and I think eventually they're going to come out with something that's just going to break the bank again. I mean, they did it several times. They revamped the iMac, explosion. They came out with the iPod, explosion. Came out with iTunes, explosion again. With the iPod, and then they came out with the iPhone, explosion. And I think they came out with the iPad. It exploded, but not at the same level as the other guys. Same thing with the iWatch. But I think as Apple Pay kind of kicks gears, and it's something good when all their competitors are copying the idea. So, because as soon as Apple Pay came out, guess what came out after? Google Pay. I think Apple's a strong bet, and it's cheap. Well, cheap in comparison to what the value of the stock is. It's at about $98 the last time I checked, probably a little over $100 now. They paid dividends, although they could pay more, but they're worth a lot more than what they're valued at. Because like I always said, if Facebook can be valued at like $500 billion and make $5 billion a year, then what value does a company that makes $200 billion a year in revenue? That's something that you have to then look at. It's like, well, that one evaluation has to be wrong. So if you're looking at companies with that work in similar industries, and one's does less but is valued almost as much, then we got to think there must be a dangerous value play right there. But as far as overall trading, all I can say is stay focused on dividend stocks. They're still cheap. They're growing. AT&T was a good bet for me. Putting a lot of shares into AT&T definitely paid off, because I made $3 a share off of it. And they pay a handsome dividend. But with that said, I have nothing else really as right now. Just kind of a quick update. Comment below. I do apologize for people who gave me stocks they want to look into. I really meant to do it, but I've been busy trying to get things settled and everything, and get the next step of my life. Looking into getting a house out here. It's going to be kind of interesting here, and I like it here, like out here in the Midwest. But if you guys have any questions, always feel free to comment, like the Facebook page, like us, follow us on Twitter. I'll post all those links on below. And what I'm gonna try to do this month is I'm gonna try and update all my trades via Twitter. And I'm gonna really, really try to do it. And if you guys have any suggestions for me, I'm trying to think of a good website. But I also got a fund I'm trying to launch too. So we'll see. I got a lot of busyness going on. But thank you guys. Keep going. Keep subscribing. I'm glad we're up to 130 subscribers, I think. But let's keep the more people that subscribe, the more people that ask questions. And you never know, no question's stupid, and you never know if someone else has the same question but they're too afraid to ask it. So ask it anyway, and I'll do my best to answer it for you. If you got any questions about 401ks, Roth IRAs, I can certainly do my best. I can help point you to some of the best industry leaders in managing those accounts for you. So if you have any questions, always feel free, drop a line. Just don't email, because I don't check that email at all. So just post on the video or post on the Facebook page. I think I left it open for everybody to post. You don't even have to like the page, but do like it, because I would like to get to 100 likes. Thanks, guys, and I will see you next time.